Hey guys, I got a quick short video for you here, but I wanted to talk about some good economic news that just came out. And this is PPI, or Producer Price Index. Let's take a look at it. And I'll leave this down below for you, but it basically goes over PPI and how it has actually been coming down quite a bit. And the PPI, or Producer Price Index, actually slowed to an annual pace of 4.6% last month, which is significantly lower than the revised 5.7% in January. And economists that were surveyed were actually expecting the 12-month rise in these prices to slow to 5.4%. Instead, we got 4.6%. And looking at core PPI, which takes out food and energy, also declined. The annual price increase dropped to 4.4%, which is down from January's 5% annual price gain and 0.1% increase. So we saw a 0.2% drop in final demand goods, which spiked 1.2% in January. We saw a 0.8% drop in trade and a 1.1% drop in transportation and warehousing. And look at this, egg prices sank 41.3% over the month. However, eggs are now up 38% for the year ended in February. So we did see a monthly decline, but eggs are still massively higher in price than they previously were. And this is another important thing to realize about PPI. Because the producer-centric index captures price shifts upstream of the consumer, it's looked as a leading indicator for how prices may end up at the store level, meaning CPI could potentially be coming down even more from here. And as said by the senior economic advisor of PNC Financial Services, consumers have shown little retreat on the spending front, so at least a small dip in service providers' prices should relieve the impetus for those costs to be passed on to consumers. And they continue to forecast a mild recession in the later half of 2023, resulting in large part from consumer demand hitting a wall as costs have risen for both necessities and recreational/discretionary spending. But I'll leave that down below for you to look over it yourself, but this is definitely a good sign. Now I also quickly wanted to move over to crypto and show you a couple things that I'm noticing there. And first off, Bitcoin. We did have our golden cross here back in the beginning of February, and it has continued maintaining itself. The 200 MA was actually a jumping off point here at 19.5 when we dipped down, and that's definitely a good sign that it found that as a support. Now another thing you'll notice is the 200 and the 50 are both on a rise, which is a good sign. You want to keep seeing that. You want to see that these moving averages are moving up and not starting to curl downwards. And you know, as many people expected, a break of 25.2 would push us even farther, push us potentially to 28,000. Well, you got to realize how much things ran from that 19.5. It was almost straight up from that point, and things definitely became a bit overbought. But as we hopefully continue to trade in this 24,000 area, the RSI can reset itself as we consolidate, and our next breakout out of that 25.2 can become our support, and we can come back to that 26 and break out of that and push towards 28. One thing you want to watch for when we do have that golden cross that I just mentioned is you want to see it being confirmed by high buying volume. And we are definitely seeing a bit of higher buying volume than normal. But back here in November, coming up from the bottom, we did see right around the same volume, but not as much in terms of quantity. A continued buying volume, which we have been seeing ever since these MAs started actually curling up. So could Bitcoin potentially retrace? It's definitely possible. I will be looking out for this $23,000 area and see how we perform here on the 50. Do we bounce off the 50 MA? Do we fail it? And then we come down and test the 200. Those will be important things to watch out for. And despite us running up from 19.5, I still do think Bitcoin is a great DCA, and in my eyes, this is still only the beginning. Now, I also wanted to show you guys Ethereum. We did break out of our long downtrend that we saw here ever since the peak. And one thing you'll notice is there's this long-term support line that we've just been following ever since 2020, and it has maintained it. This yellow line here, it is continuing up it. I think this is an extremely crucial support, and if we do potentially break this, we're in for a lot of pain. I personally think based on the cycles, based on how the market seems to be improving economy-wise, at least in terms of inflation, I think the economy, looking at the housing market, looking at employment, is due for a rude awakening. But, you know, in terms of inflation, things are looking better. It's possible the Fed only raises rates a few more times, and that can definitely help the stock market and crypto. So I don't necessarily think we're going to break this yellow ascending support, but it is very important to watch and see that we don't break it. Another thing that's important to know about Ethereum is we did also have a golden cross here. And last time we actually had one, we did have a death cross, and then it immediately switched to a golden cross right here. And on this golden cross, we started at about 26,000 and ran up to our peak of nearly $5,000. And we haven't seen that golden cross since then, until recently. Another thing I'm watching here is this ascending resistance we have. But it's very nice that on Ethereum, we've been seeing generally higher highs and higher lows ever since roughly November. Now, I also wanted to bring up Litecoin, and this isn't a general uptrend ever since roughly June of 2022. And this one actually saw its golden cross back in November of 2022, a little bit earlier than both Ethereum and Bitcoin. I personally believe we have broken our downtrend, and we've been seeing the beginning of this uptrend ever since roughly November. And we have now been in a very quiet, very, under the radar uptrend ever since summer. And Litecoin has a halving as well. The hype cycle regarding how the halvings play is definitely quite a bit different than that of Bitcoin. Typically, it's kind of a buy the rumor, sell the news sort of thing, where after the halving, Litecoin actually sells off. So it is used more as a buy the rumor, sell the news type of event, type of catalyst. And just be aware of that as we approach the halving for Litecoin. It is a little bit sooner than that of Bitcoin. But I'll likely go a little deeper into Litecoin coming up here and go over the halving and all that type of stuff. But I'm bullish on Litecoin as well. And I do think it will uptrend as long as Bitcoin does as well. I will be cautious with this. And one thing to look back in history here, during the different cycles, we never actually had a new higher high than back here in 2017. Whereas Bitcoin has seen a new high after its cycle. Litecoin kind of just had a hype, and it never really broke out of its previous peak in 2017. So I'll be a bit cautious with it, and we'll likely, look at taking profits as we edge up towards, the 400 area, just in case we actually don't break out. That's my strategy for it. As it becomes more and more profitable for me, as we reach the 300, 400s, I will be trimming, 10% here and there off the top, just to lock in those profits, just in case we don't break out of that previous 400 area. And if we do have a breakout of that, I could always put some gas on it, buy back in, and let it ride up, set a stop loss at that peak, and just play different levels as it moves along, kind of as a swing trading fashion. But for now, I'm very bullish on Litecoin, Ethereum, and Bitcoin, but I do think these three cryptos will play out very well over the coming months and even years. But let me know what you guys think down below. Let me know how you feel about inflation lately. With PPI coming down, that's definitely a good sign that we should see lower and lower inflation moving forwards, potentially less rate hikes. But we will likely still see at least a few more rate hikes in my opinion. But let me know what you think down below. Thanks as always, guys, and see you later.